So Glenn, what are your goals in terms of both short-term and long-term growth for First Resource Bank?
You know, we grow 12, 15% a year. I think in the market, it's absolutely there. We see we're in suburban Philadelphia, Chester County, so we see a fair amount of consolidation, which has created a certain customer base of the acquired banks that are really disenfranchised. Community Bank may have been rolled up a couple of times into a $4 or $5 billion bank. That's great for us. We love that because they're used to dealing with a community bank and they value the community bank relationship. Long term, I still think there's a great market for community banking in this country. I think it's necessary. When we've seen downturns from the Great Recession, the people that kept making loans and kept the jobs out there were the community banks. Even when the large banks just stopped, as a matter of policy, the community banks just kept doing the good work of preserving jobs and working capital loans. And I think it's a necessity for this country to support community banks.
Years ago, in my 30-year career, it was $100 million. If you were a $100 million bank, you had the definition of a community bank. I think the definition moved up to $1 billion, and that definition may have moved up to $3 billion. Frankly, sitting here right now, looking at everyone around the room, it's probably $10 billion, and you look at the FDIC's website, they have a definition that's probably a paragraph long. But it's great space to be in. There is a need. The conglomerates, you either fit in their square or circle or you don't. Dealing with your community, your traditional community banker, which we are, my counterparts at this table are, you do take a look at things a little bit differently. So again, growth for us is going to come from both sides. We want organic growth, but the competition out there is difficult for the smaller banks. Without some of the high-tech things that the large banks actually have and could probably afford greater than anybody at this table.
The crazy part is, you're talking about $50 million in capital, you were talking $30 million. The pressure that puts on the infrastructure of the bank to get it to $500 million that quickly, there's a lot of risks that are involved in that. I mean, we had the luxury, we raised not quite 11, so we had the luxury of not having to worry about 30 and trying to have a return on equity on 30. It was easier to figure out a return on equity on 11 or 12. If you're raising $50 million and you want to have a return on equity in year 4 or 5, you don't have any choice but to do pretty much every loan that comes down the pike. And there's a big risk that's involved in that I don't think the FDIC's really thought that much. They think more capital is better, right. But it creates this whole other set of risks. You get back into that Florida, Atlanta situation. Yeah, you get it back into that situation. You're granting a new charter with a lot of capital thinking it insulates you, and I think it actually has a lot of unintended consequences.
To piggyback on that too, with the emergence of technology, with how the de novo charter process is being played out, do you also think that the idea, the definition of what constitutes a community is changing? I mean, with technology, you don't even have to focus on your local group. You could focus on a certain demographic or the underserved. I mean, do you guys see that evolving in your space, but also, going forward?
Yeah, I mean, we see we have a legacy in our community of community banks that are physical community banks. So there's a customer base that will gravitate to us because their parents or whatever, they had that community relationship. What we're trying to do is take that community relationship and then pull in the millennials and people that are now doing things more on their phone and more technologically. I think there's probably that affinity group that you could get that only ever does anything on the phone. I think that's a challenge for a community bank. Anybody at this table is, how do you tap into that group that only does this? And how do you pull them into be part of your core bank? And I don't know that anybody's solved that question yet. I think it's an emerging thing, a challenge for all of us.
I do believe that it's going to segment along a lot of different lines, and communities are going to change. The one thing that always surprises me, though, is how quick people want to adapt to different types of technology. As being an ex-chief information officer, how quick they'll adapt with no security wrapped around it at all. And I find that disturbing on a lot of fronts, but so some of the segments of the community that you're asking about, we're actually having to educate. Look, we don't want to be behind technology, but there are some technologies, and some of them have hit the press recently, where, you know, try to get a refund if you use a certain particular type of payment system. The banks can't help you. It's going to be left to that developer of the software that's allowed that payment system to create that error, and you're good luck getting a refund. So I think what we also have to do is parcel out certain segments that we want to go after. The fortunate thing about being a commercial bank is that we have a little bit more time to deal with that, because what everybody's doing is in the consumer role. And so, you know, consumer this, and when you need a real heavy-duty commercial loan on some property or development, then you're going to sit down and talk with somebody who can guide you through it. It's coming, I'm not denying that, but I also think, so some of our work is going to be educating the community on exactly how to protect themselves with some of the software that they think is safe and it's not, and how do you incorporate that software then into the high finance group, where things are deemed, when people deal with you as a bank, they trust, everybody keeps forgetting, the trust of the money is what we are about. And it sounds old-fashioned when you say the trust of the money, but it's the trust of the assets, the trust of the money, and more importantly, I think where community banks are excelling, it's the trust of the advice in projects of where people are really starting to bring their work to us if they have a commercial lending capability and want.